All right, let's look at a few more trading setup examples. This first one is on the Australian Canadian dollars, a 15-minute chart. So this is really suited for day trading. It can get you into some, very fast turns in the market with low risk. We had the situation where this bar here, notice it was straddling. So the market was trading below the 200, and what you have to do is recognize when things aren't working the way you would assume. So what I'm talking about is when the market started to trade below this level, and keep in mind here there was a, let me blow this up a bit. Okay, the market started straddling this moving average, which says that it's starting to break down, and there's indecision. Traders don't know if they should keep above the 200 or whether the sellers are coming into control. So you start getting more straddling going on. This bar is straddling. Then you had this bar, which is like the whole thing is below the 200. That's our signal to go short. So we go short below there. It doesn't go far, okay? It just kind of worked its way down and then started going sideways. And this is obviously part of trading. Not all trades are going to work out and be big home runs. But what happens is, this is kind of one of the nails on the coffin here, is that this bar really straddles the 200, all right? It's saying that the downward momentum is really starting to come into question. Then we have this second bar here that is straddling, all right? And it's a very strong bar. Those are saying, wait a minute, this is clearly over. Then we have a full bar, okay, that is above the 200, so we can buy the break of it. But now I want to point something out. This is a little bit of a nuance to the system. Normally you would just buy the break of your setup bar. Okay, remember the setup bar is the one that is clearly, above or below the MA, or maybe there's just a fraction of it touching. But if this bar, this setup bar here, is inside the bar to the left of it, I will wait to buy the break of the bar, the outside bar, which is the bigger bar to the setup bar. So we're going to buy here, okay? Let me just squash this together. So you can see that this was the entry back here. And it really took a while for this thing to unwind. Let me just see if I can get it all in there in one shot. This was the entry level here. Now it was going great. Eventually the market came back. It wouldn't have stopped you out. Now depending on what kind of money management strategy you guys are using will determine how you ended up with this trade. But the money management is something I will talk about in another video. Now let's look at a gold chart. I think this is the one I wanted over here. This is a daily chart, so we're kind of going to a very different extreme here. And actually, no, I want to go to a weekly a second. You can see on the weekly, right? Remember, everybody is talking about gold for a long time, and eventually it starts breaking below the 200. This first bar here that's straddling that 200 really says that the upward trend is breaking down, okay, and it could go either way. Then the next bar is another straddle. We have another straddle over here. Finally, this bar right here is fully below it. That's our time to go short, okay, in there. All right, we had some good selling pressure, but it bounced back up. Then it came back to the 200, which is common. That's where your normal trend traders will get in here, which once again is a perfectly valid. I just like to have the options of catching both types of trades. And one of the things that is important is you need to be able to decipher what the market's telling you. And once again, back here, it's starting to tell you it's breaking down by the straddling. Then when you get the full bar underneath, that's the confirmation that it's truly breaking down, and you run with it. But you also have to recognize when the market is coming back to retest the moving average, because it's like it wants to retest that resistance level one more time. And say for some reason you miss this area, then you can certainly enter here on the traditional trend entries, okay? And that's something that Nikos talks about in some of his teachings. Now, let's go back here, way back in time. Okay, this was back in 2008. You know, over in this area here, we were clearly above the 200. The market came back and bounced. All right, it bounced actually quite far. It only looks like a couple bars, but it bounced. All right, but then what happened is it started to roll over, and notice that we have a bunch of bars. There's actually 4 bars straddling that moving average. All right, that tells us that the upward movement was starting to break down, but that upward move is not confirmed until you have the setup bar to the downside, which we never had. Now notice what happened. This white candle here met our criteria for a buy entry or a buy setup bar, and we'd enter above the high of it. And then if we squash the chart together here, let me see if I can find that. It's actually way back here. So back then, you know, this line is about $830 an ounce, and then gold went on to, you know, to hit a high of whatever it did, you know, $1,900 and something an ounce. So just that one little innocent entry can get you into very early trends. Okay, that's it for a couple more examples. Once again, I want to keep these videos short, so stay tuned for the next one.